Well, welcome everybody. Steven Sitkowski here. Welcome to this week edition of Market Insights and what a difference a week makes. We saw signs of that when I was with you last week that I pointed out that the market was starting to recover. It certainly did. Those of us that were on it had the great fortune of making a bunch of money. I hope you did as well. And let's take a look at what's going on now. Because last week is last week, right? Quick reminder that everything that we do here is for educational purposes only, not intended as investment advice. So, what should you be watching this week? Well, we got leading economic indicators coming out today. So we'll see if that again is another negative number. Tomorrow, a little bit of Fed speak. Wednesday, the minutes from the last Fed meeting will be released. I don't think there'll be anything particularly insightful there. On Thursday, we have the initial jobless claims expected to come in at 230,000. Anything below that would be encouraging in terms of the economy. What the Fed will be doing, I think, is fairly perfunctory. We already know they're cutting. And then on Friday, that'll be the big day. Now, Thursday, we also get the services and manufacturing PMI numbers. That could be telling. Again, a lot of people are watching the economy and they're looking for signs that we're headed for recession, which we're not, but they're looking for it. So that's okay. We're definitely going to pay attention to that. But the big news is going to be Friday when Jerome Powell speaks at the International Economic Conference in Jackson Hole. I've actually taught at that very same facility. Absolutely beautiful. So that could definitely be market moving. So we'll be watching that for sure. Last week's heat map, thing of beauty. Look at NVIDIA. So NVIDIA moved down into the 90s. I added to my position on that. Increase that to 2,000 shares on which I'm doing covered calls. By the way, on 2,000 shares of NVIDIA, not everybody can afford that, but you can generate in the neighborhood right now, current prices, around $250,000 a year in income, just off of one position. So I would love for all of you to get to that point where you can start building a stock portfolio, create covered calls, which creates income, lowers your risk. It's a beautiful thing. Here is the one-year heat map. Look at this, NVIDIA up 193%. But most everything has been up for the last year. There are some exceptions. You know, Pfizer and Bristol Myers, they haven't enjoyed the same good fortune, UPS, but Costco's way up. Walmart way up. I'm doing covered calls on both of them. Amazon way up, doing covered calls on it. Meta, doing covered calls on it. Alphabet, Apple, doing covered calls on it, and Microsoft and NVIDIA. I know I sound like a broken record, but it's just worked so beautifully. Market breadth for the week, a bit of a mixed bag. You know, the New York Stock Exchange, 279 new highs to 115 new lows. On the NASDAQ, 278 new highs versus 410 new lows. Stocks trading above their 50-day moving average, we're now up to 68%. So this rally has been more broadly based, a good thing. Look at who's charging back. So this is from the August 5th panic lows. NVIDIA up 35%. So you might be wondering, well, what was it you saw that would cause you to step in and buy? Actually, it's what I didn't see. I saw NVIDIA go from 130 to low 90s, and I asked myself this question. Has anything changed with NVIDIA? No. Is AI no longer a thing? No. Are they still the leader in the industry? Yeah. So what should I be doing? Selling or buying? Buying. I mean, some things, if you just take the time to examine them and use your head instead of your emotions, are pretty simple. But a whole bunch of these stocks made great comebacks. Atlanta Fed dropped their GDP estimate, exactly what should be happening in light of restrictive monetary policy that is getting ready to get a bit looser, in my opinion. Here, let's look at something. What are the latest numbers? Let's see. CME Fed Watch tool. Latest probabilities. So we have a 77.5% chance for a 25 basis point cut. That's at the September meeting. 22.5% of a 50 basis point cut. I think the Fed's going to go in gradual. I think they're going to cut 25 basis points, 25 basis points in November. They may hold off because of the election. And then I think you're just going to see a gradual downward move. Right now, it is forecasted over the next 12 months that we're likely to see interest rates go down about 2%. So definitely going to be a stimulus to the market. Only thing that can stop this stock market, by the way, is a recession. And I don't see it. So when the market fell, do you know what happened? Investors stepped in and bought. But you know what the big money managers did? Those morons were selling off. They caused the fall. Is that crazy? And I think there's people out there paying these people money for what? To underperform the market, to do the wrong thing for them. But so many people, oh, I just can't do it on my own. You could with the right information. So what is the chief concern for investors right now? Recession. And it should be. Not that the average investor is expecting a recession, but of all the things on the list, yeah, it's probably the highest risk item. Should you be watching the economy? Absolutely. So recession followed by geopolitical conflicts. Inflation, which was at the top of the list, is way down now to 12%. So what is the economic outlook? 76% are predicting a soft landing, 8% no landing, and only 13% a hard landing. Fed expectations, 31% say 4 rate cuts in the next 12 months. Another 29% say more than 4. So there is a 60% probability of at least 4 rate cuts in the next 12 months. Stock market's going to love that. Consumer sentiment edges higher. First time in a few months since March, steadily heading down. People are feeling a bit better. Companies are buying back stock at record levels. Good for existing shareholders, for sure. Market sentiment ticked up, went from 40 to 42%. Market rebounded. So that's what happens. Earnings this week. So today, Estee Lauder came out. We got Lowe's announcing before the bell on Tuesday. So tomorrow, Target before the bell. On Wednesday, those are probably the biggest announcements. A lot of retailers are announcing. So we'll get a sense for the economy. So that could be significant. Sector returns year to date. S&P is up 16.86. Technology is up 27.17, followed by communication 22.51. The big losers have been real estate and consumer discretionary. Let's take a look at the charts. Charts are looking good. Here's the S&P 500 for the last 6 months. Isn't that great? So I told you last week, watch to see if we could breach that 50-day moving average, and we certainly have. Everything looks terrific. How about on the Qs? Also terrific. And what about our track record on our trade ideas of the week? How are they looking? Pretty good. We have closed this year 74 trades, average return 18.9%, average hold 19.2. So based on my mathematics, we're averaging close to 1% a day on closed trades. It's amazing what you can do when you've got the requisite knowledge. So hopefully you're learning a little something from me each week on these. So I'll be back with you again next week. Until then, thanks for hanging. Be safe, be blessed, and I'll see you soon. Bye for now.